Hey, good morning everyone, and welcome to the PivotBoss pre-market video for Thursday, November 8th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We have seen a major squeeze in the previous session. Prices pushed through the 2791s and rallied back toward prior highs. And right now, after such a big day up yesterday, we are having a narrow digestive type of day so far. We could continue to see that type of behavior where we see back and forth trading range action. After a day like that, you just want prices to remain above the midpoint of yesterday's expansive day, and that would suggest more upside. This squeeze has been very relentless, and I mentioned before, closing the month above the previous month's midpoint, which is that level right there, about 27.75s or so, suggests that the change of bias is back, and we could be headed higher again into the end of the year. So this is a big squeeze here. There's nothing to say that we could not see a rejection here and fall back some degree. But again, as long as 2700 remained intact now and continue to be bid, overall we have more upside down the road. And it appears that this low is now a strong low just by virtue of how far price has rallied away from it, and that's always something to watch out for. Again, if price were to pull back whatever degree here, as long as it's above this 2700 level and form a higher low, that could ultimately end up in more upside if we even get a pullback of that magnitude. It's been very bullish. We do have the FOMC statement and the Fed interest rate decision later on this afternoon at 1 o'clock p.m. Central, 2 p.m. Eastern. That's going to give us another FOMC key level to watch. It's the same type of level like these baby blue levels here that give us very important insight into where prices are now and where they're likely headed down the road. And again, that could give us a very good pivot point here to play off of in the next several weeks. Now let's take a look now at the NQ. There we go. This one had a big time squeeze as well. Again, tech huge up yesterday. The cloud stocks up big time. All the big ones, Apple, Amazon, up big. You can see here we broke down this trend now. This trend has been broken down. Yesterday got price through the midpoint of Friday's range. We had a major continuation through that level. That's a stop run. This type of behavior right here suggests more strength into the end of the year. That's what that type of breakout and trend day does. It's a transitional type of day. And so again, as long as price can continue to hold on the next pullback, should there be a pullback, and that pullback could be even as deep as 6,900, maybe 7K, anywhere in here could still be possible on the pullback terms for a shot at continuing this thing up. But again, here's the midpoint of last month's range. We're currently above it. Digestive day today after a trend day, and we have the FOMC statement and results later on this afternoon. So again, it could be a holding pattern, a little back and forth, kind of a downward daytime bias perhaps as price pulls back a little bit. But overall, this breakout, again, the way that this is broken out reminds me back in like the breakout we saw in April. So if you see this move over here, they're very similar. Let's zoom in over here. It's like this type of day right there where we had been going sideways for a while, and then you get that transitional day and it leads to a multi-week and multi-month move higher. That's the type of day that we're seeing here today. They're both very similar. You can see here, again, the ES had the same type of pattern. That breakout led to a nice finish here, and then now we're seeing the same type of move. Could it lead to an end of year move as well? So again, we're going to continue to watch this. As long as price remains above 7K, above 6,900, this thing has a good shot to push higher, although pullbacks could be seen. Again, that FOMC is going to give us another data point to watch later on. If we take a look at crude oil, this one has been non-stop down, very bearish. There is no life to this one at all. It is getting crushed. And I mentioned before, we are at the best spot to watch for signs of a buy opportunity, right? Watch for signs of rejection. The 63.41 is the level. We're below the key range low. We could stay down here for a while, but as soon as we're ready to pop back above that 63.41, we might have a shot to get towards 69.34, maybe even toward the upper end of the range. But right now, this is aggressively bearish. This far exceeded what we thought we could see earlier when we said, hey, if this thing can't hold above 76s, look for a move back to 69.34. That was considered a big move, and then I mentioned there's a shot to go across the range, but this was the major move. We have far exceeded that now, and we have shown no signs of life. Every rally has been sold, failed new high after failed new high, and so this one's hard to touch right now to the upside. Every pullback is likely to be a selling opportunity until proven otherwise. And how much farther do we go to the downside? We have 60.44 here, and we also have the 57s as the 100% target down here. 57.47. Those could be the next major targets to the downside before we see any semblance of strength. Again, this thing has been extremely bearish, so don't try to buy a falling knife here. Go with the flow. The path of least resistance right now is to the downside, and if we break down below 61.50 today, there could be much more selling pressure ahead. All right, let's take a look now at, let's look at gold. Here's a look at gold. This one had a shot to break through 1240s, hasn't quite gotten it yet. Again, this one needs that transitional type of day as well, that big push, that huge move day, this type of day here, right? That gets it through 1240s once and for good, and basically gets this thing going higher, and it just can't do it, can't find it again. But it hasn't broken market structure, it hasn't broken down below prior pivot lows. It's built many different levels of support here, and that's very bullish. So again, this could just continue to go sideways for a while here before it makes its next move, but the path still is to the upside. But right now, no hurry to see any movement out of this range so far as gold. All right, let's take a look lastly at, let's go with RTY. This one had a major squeeze to the upside, and ever since it failed to hold that right there, that 1520, it's been a major continuation. Now the key level here remains 1520, because we could get a pullback as deep as that zone and still be a great area for bulls to defend ahead of what could be a solid finish into the end of the year. Again, can these maintain market structure after breaking back above these key levels? Right now, with the strength of this squeeze, it's been very, very solid, and more upside likely to be seen given how strong this bounce has been. This is the key level right here, and that's about the 1620, 1610 LVN. Once it gets above that zone, it's you know, the next level up is 1750. So that's the major level down the road that we'll have to watch to see how price responds to it from a longer term, end of year type of perspective. In the near term, today, after a trend day, you're going to see a digestive day. So today is a fade the edges with an upward bias. We could see quiet type of trading behavior throughout much of the session heading into FOMC. But for the most part, again, can it get above that LVN? That's the 1620 level, because if so, the next zone above will be 1750. So that's quite a ways from where we currently are. We're currently trading 1578. Remember, if we do see some sort of a pullback here into, say, 1520 or 1525, that could be a great opportunity to go 1525 to 1750, perhaps by the end of the year. So again, we'll see how this plays out. But overall, very, very bullish so far. All right, that is it for now. Let's see how this continues to develop heading into the FOMC later on this afternoon. Good luck, trade well, and I will see you in the trading room.